The stock market closed out last week strong. The crypto market had a nice little run up this weekend, but is it going to last? We got Kevin coming to you live from a very secure location in witness protection. I am here, as always, in my lovely estate in Colorado. Before we get to today's show, talking about the markets, please hit that like button, subscribe to our channel. Nothing we say is financial advice. Please do all of your own research. Make sure that you're doing any research of your buys and sells. We're not experts here. We're just two guys who love talking about the markets, have a decent mind for investing, and that's about it. Kevin, how are you doing on this fantastic Monday?
Doing pretty great. It's a little rainy outside, but that's all I'll say, considering I'm in witness protection. So nobody look at any of the weather
don't
patterns.
Give your location away. Don't give your location away, okay?
Yeah, I don't intend on doing so. But yeah, it's pretty slow. The traditional markets are closed today. We see some, obviously, money never sleeps in crypto, so that's been moving a little bit. We saw some of the weekly closes last night. We're looking forward to seeing what some of the price action holds for the week ahead. And yeah, I'm excited. It's going to be, should be a fun week.
Yeah, we got a little bit of time, a couple of weeks until the next FOMC meeting. Right now, a lot of the focus on the macro level is around earnings reports coming up. So we're getting back into earnings season for Q4 2022. So in the coming week, we have Goldman Sachs, we have Morgan Stanley, Charles Schwab, Procter & Gamble, Costco. So we're going to get a good mix of, what the financial businesses are, kind of looking at out there, how they're going to view the upcoming year, as well as some retail data as well. So I think it's going to be pretty interesting. I tweeted out this thread the other night. I'm blanking on the lady's name, but it was a very, it was a very long thread about the amount of debt out there and how banks are planning for higher rate of defaults in the months ahead. Some people were calling her like the Peter Schiff of her industry. Take that for what it is. But I just found, the data to be interesting. The fact that banks are adjusting their expectations for defaults in the near future. So I think that's definitely something that we've been talking about for a while with this incredibly high rate of consumer debt, and definitely has me not as bullish as most people at the time being. So, how are you feeling about this current market sentiment? We've seen a nice run up on Bitcoin, year to date. I want to pull this up real quick. Year to date, Bitcoin is off to a good start. We started down around, 16.5. We're up like 26% year to date on Bitcoin, which is, is a pretty nice way to start the year. How do you see it going moving forward, into the rest of 2023?
There's always bear market rallies, and that's what I think that this is paired with a couple of other things that are going on in the market right now. Obviously, the DXY has been dumping for a while, and I think a lot of people are just so eager to get back into being bullish. I mean, the fact that we saw the pump from the first of the year into the 16th of January, which is today, and we're 26%. In some way that seems somewhat not artificial, but it seems very market maker in a way, where we kind of know that we're going to get Q1 earnings at the end of like March or something like that. I believe for Q1.
April. It'll start in April because March is still part of Q1. Yeah.
My bad. But yeah, when we get it in April, I'd anticipate, a lot of people are just taking advantage of this pump right now just to offload. I'll get into the deeper, what my theory is on what's going on in the crypto market itself. But yeah, I think people are just, taking profit. They wanted to start the year strong. We had a bad year in 2022, and I think people are just really excited and euphoric right now. But that doesn't take away from a lot of the more macro concerns that we still have. Like, I'm still very, very cautious about unemployment. I think that's going to go up way more. I think that if we, start using some of the rates currently, we could potentially see a spike in inflation, which is something that we don't want. It's something that, Michael Burry, the guy who shorted the 2008 housing market, he says that it's a high chance that we will see an inflation spike if they turn on the money printer too soon. So I don't think that there's room for a pivot or even a soft landing at this point. I think a lot of people are just, wishful thinking. They're hoping that, we can get through this without having to see too much more consequence, because last year was a really bad year. But yeah, I guess if you're asking me, I'm still bearish as can be. But I think there's just a lot of macro concerns that we're seeing right now, and then this might just be a bit of a rally, a little bit of a pump, exit pump. Could be anything, but that's what I think it is.
It definitely seems like it is creating a lot of FOMO amongst retail traders. When we have people who aren't in the crypto market every day who don't consistently pay attention to this talking about crypto all of a sudden, despite how bad the macro conditions are, it seems a little bit, like a false setup for them. Like I think it could be pretty ugly, and one of those opportunities where market makers are moving the price up, looking to pull the rug out from under people, get that level of capitulation where they can buy your tokens for as cheap as they can before we start the next leg up. And who knows how long that could be. Like, we could see a nice pump through the first quarter of 2023. We don't really know when a lot of these things are going to hit. We're just doing like the best we can with the information we got, which is kind of why, we were talking before the show. I know that you're mostly in cash at the moment. I have my long-term crypto holdings. And at this point, I've been sitting on the same amount. I've been DCAing when the prices were down, like Link and Matic. I didn't, I usually have my weekly purchases on Monday. I went ahead and postponed it today because I do feel like it was a little overinflated at the moment. But for the most part, like, I do like having some skin in the game so I can enjoy these run-ups, but not fully in at the moment. I have some dry powder where I can take advantage of the pullbacks.
Definitely. I mean, that's obviously that's a pretty good strategy, as you could get out of the market now if you really wanted to. You've seen a decent pump. It's a perfect opportunity to, if you did have cash on the side, not cash on the side, but like still some of your assets, I mean, take advantage of the pump. That's what I personally would have done, but not financial advice. Anyone want to do.
For sure. People always talk about dollar cost averaging into the market, but not a lot of people talk about dollar cost averaging out of the market. And that's a very fine strategy as well. Like, if you have, Bitcoin, Ethereum, whatever, selling 10% here on a pump, 10% there on a pump, there's nothing wrong with that. Like, we're not going to see these things. We're not going to see BTC hit an all-time high anytime soon, in my opinion. We're not going to see ETH hit an all-time high anytime soon, in my opinion. So I think that you can definitely take advantage of that strategy, not just on the entering the market side, but on the exiting the market side as well.
Definitely. I mean, that's how institutional players always win. They push it up, and then on the way up, they get rid of it. And then who buys it? Retail. So it's just a perfect opportunity to exit a market smartly without ever, trying to catch the top or the bottom.
Yeah, we don't have as much to get into on the technical side today. So I think it's interesting to talk more about like the psychological side of the markets, especially in crypto, with a market that is open 24 hours a day, 365 days a year. It's very easy to get caught up in these movements here and there. Like, right now, the stock market's closed because of MLK Day. The crypto market isn't closed. So you can absolutely, your sense of time that you've been in the market, it's greatly distorted. I think I broke down the number. I'll have to break down the numbers again, but like the amount of hours that the traditional finance markets are open a year compared to the number of hours that the crypto markets are open every year is just, minuscule. So it's very easy to get this distortion of time. Like, the best returns I've ever had in my life were, stocks that I held for years and years on end. It was buying Tesla at $40 a share, selling it at $800 a share. It was buying Nvidia at $15 a share, selling it for $300 a share after a stock split. So I think too many people get caught up in how fast moving the crypto market is, and it negatively impacts their ability to make money in the long term. And then you have the bigger institutional players who will just take advantage of that and are going to win that game 10 times out of 10.
Yeah, they don't lose. I mean, there's a reason why they're institutional players, why they're the big money. They're the ones who are able to keep the price up during bull markets. You know what I mean? Retail doesn't have enough powder most of the time or cash flow for us to keep the price going throughout a bull market. We're in addition, we're in exit liquidity when it comes to these people who have the means to definitely push the price up, like potentially what we've seen over the past week, and then eventually just end up, selling and dumping on retail. So yeah, it's, I mean, it is what it is, but that's the game, and that's just how it's played.
Yep, 100%. Let's get into a couple of the charts here. We're going to keep this show a little bit on the shorter side today. So let's start with the DXY.
Sounds good. Let me just pull this up. Present. There we go.
Okay, I'll get some elevator music going for these times where we got to get the screen share going.
Yeah, my bad. You know what we should have? We should have Limp Bizkit.
All good.
Always Limp Bizkit.
Always Limp Bizkit, huh? So, fun fact, just go off on a tangent. That was one of the first concerts I ever went to back in like 2002, 2003. It was Papa Roach, Exhibit, Limp Bizkit, and Eminem.
That's an amazing lineup. Where was that, in Florida?
Right? No, that was back in good old St. Louis, Missouri. Back in the good old days.
That's a solid lineup there. I would definitely like to see all of them.
I had no business being at that concert, but you know what? I was like 16, 17 at the time, but we survived it. So let's look at the DXY. I know it's been dropping as risk assets have been rising over the last couple of weeks. Where do you see the DXY headed in the coming days, weeks, months?
So, I mean, as we can see, we've been dropping since the hype Wednesday, September 28th, 2022. We've just been dropping nonstop. And again, a lot of this is people just hoping that the Fed rate hikes slow down. Obviously, it's also a correction of a larger macro move, but we're in the oversold area as we can see right here on the stochastic RSI. So the dollar, I think, is undervalued right now. And this 102.038 support line right here is being tested. We wicked below it, but then we're currently above it. DXY is pumping a little bit today. And as we saw the DXY pump a little bit today, we saw Bitcoin drop just a little bit. But again, it's inverse of each other. So whatever one does, the other does the opposite. Sometimes they work together. Again, that really depends on the momentum or the psychology or the momentum of people who are buying. Sometimes you might see FOMO is stronger, and so people are just buying more than the actual, inverse operation works. So we just see both of them go up in price. But I want to take a look at the weekly. We are extremely undervalued on the weekly. We've been, let's see how many closes it's been. It's been 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. This is the 13th week that we're pretty much oversold on the weekly, which, I mean, it can stay there for a while. I mean, we're not surprised. It can stay overbought for a while. But we've been coming down here, and if we look at this blue line here, it's served as a resistance in March of 2020. It's been resistance here in 2016. And I believe it's like in the early 2000s where we see it hit again. Yeah, it fell through.
Yep.
It couldn't be held to support, and then just one more time. And then obviously came back, but held the support here in January 2000. So this is a pretty important line of support. And this is historical. Like, this goes back all the way to, I think, the 1980s. Like 1981 was the year that I checked when I was doing this for the show. But in all those times, it either held the support or it fell through and it became resistance. Right now, we're oversold on the daily. We're oversold on the weekly. And then lower time frames, let's see. Obviously, lower time frames, there might be some volatility. But the daily and the weekly, to me, are higher time frames to the point where, there's a good chance that we could find this being support. And I think there's a lot of macro conditions that still have to play out. And I wouldn't be surprised if we hold or trade sideways here for a little bit. Again, I think the monthly close also plays into effect. Let's see the monthly real quick. Yeah. See, we're above this right here on the monthly, but we still have just a little bit more room to go to the downside. So I could easily see January just being, a month where everything kind of goes into the oversold, undervalued section of the stochastic RSI, but that just primes everything up for the next few months. Like, we could still trade sideways and oversold, but still go up in price just enough where risk assets still take a hit. So it's really interesting to see the dollar coming down this much over the past few months, and it's kind of lining up where, right after the rate hikes, we get in February 1st or something like that, when they speak, we might be primed for a few months of just, upward push. So that's what I'm looking at. It's kind of lining up perfectly with other risk assets just being extremely overbought in the daily and the weekly. So it'll be really interesting. 102.038. I know I say this often, like this support needs to hold, but I think this is extremely important historical support. If we lose it, I wouldn't be surprised but I really expect us to be pushing up in the next few weeks to months.
Okay. Yeah, we're about a 91% chance of a 25 basis point hike at the February 1st Fed meeting. Looking ahead a few more meetings, I think they're 25 is priced in for the next, I want to say 2 or so, or 25 is for sure priced in for this upcoming one. A lot of the probability models are showing for the next 2 meetings 25 basis point hikes as well. That would get us, if that happened in the March and May meetings, that would put us around a, about the 5% interest rate that the Fed has talked about. Now, we still got a long time, between now and May 3rd, when the third meeting of the year happens. So
Right.
A lot could happen with jobs, with inflation. So these are constantly evolving, constantly changing. And, it's going to be another volatile year. Like, we're going to see a lot of big green candles like we have in the last few weeks. And we're going to see a lot of big red candles as well, wicking down too. So I think it's just a matter of having a game plan and sticking to it and knowing what your strengths are. Like, my strengths are just holding on to stuff for a long time and not panicking when I see it going red. A lot of people, that's not their strength. They have to learn that lesson. But I think you just have to play into your strengths as an investor at this point. And if that means, sometimes doing nothing is the best trade, right?
Unfortunately, that's true. That's also the most painful one too.
Yep. It's the least fun one. Like,
Right.
Is it fun? Like, you have to ask yourself, though, like, are you here to invest or are you here to gamble? Like, at some point, it's probably your returns are probably better playing blackjack than they are day trading the stock or crypto markets.
I'm here to win, JWeb. That's my plan.
I'm also here to win. So, that's what we're going to try to do. Not financial advice, yada, yada, yada. So anything else on the DXY you want to touch on before we look at Bitcoin? I want to see where this death cross that you've been terrifying me with is moving currently.
Definitely. No, we can go right into Bitcoin. There's okay. I wrote a ton of stuff for the show notes about Bitcoin, and there's so many like technical things that I've seen that don't necessarily paint a bullish picture for me in the macro, but or even like once we get out of this short-term window, I think that we are going to see some negative price action. I mean, even just looking at the charts, seeing a green candle that big, obviously you're going to expect some downside. So let's get into it. When we get over here to the death cross, we got to go to the weekly because that's where it's going to potentially happen. We can see that the 50 estimated moving average is curving up a bit. Last week seemed like it was coming down, and now it looks like it's pushing up. That's just because the price of Bitcoin is moving up. Again, I don't think that we're going to see this death cross unless the price comes down, but there are some indicators telling me that we are going to see some negative price action coming in the few weeks, days. It really depends on how long they can hold this rally up, or how before the DXY begins to start taking off. So if we look at the stochastic RSI on the weekly, last night we broke into the overbought territory. We can see this yellow line right here pushing into overbought. Again, I think there's still a little bit more room to the upside for overbought, but that again is going to affect this death cross here. It's probably going to delay it a little bit, might even trade sideways for a bit, but there is a level of support that I really want people to keep in mind. And this is purple line right here. It's about 21,800 for BTC. And I say this because on the weekly, we see multiple times where this has been either a support or resistance line. Like here, we got this green candle back in September, and it shot all the way up, and then it got rejected right there at that level, and it came all the way back down. It's a bearish engulfing candle. And if we go further back, we could see that this candle wicked all the way down back in December of 2020, and it wicked right back off. So it served the support. Let me see if there's anything else further back. No, obviously Bitcoin didn't make much money before then. But yeah, so that right there, we've seen it here. We've seen it here. Wicked up, got rejected. Wicked up, got rejected, and then finally found some support here, and then it got rejected again. And I wouldn't be surprised if we just hit that with the stochastic RSI. It'd be perfect time for a rejection point too. But yeah, that's what I'm seeing. Maybe in the shorter time frames, I think that there's still a little bit of a move to the upside. But let's go into the daily. And this is some of the patterns that I'm seeing. On the daily, we got whacked here. This is the 200 EMA on the daily. We got rejected from it. Right now, we're pushing up a little bit above it right now. That could be this potential move to this 21.8K level. Might be the last of liquidations. But things I want to keep in mind, we could look at the volume right here. Let me just grab a couple of trend lines. So as the price is pushing up here, the volume is decreasing. We can see that coming down. Price is exponentially going up. that tells me that there is low demand, low volume coming in to actually push the price up and keep it up. That's bearish divergence. That's not necessarily a good thing for price movement or price action. So let's go further back because there's a couple of other ones. We could see that from here, we had this red candle, which we can see the volume of that. That's FTX, I believe. Let's see, make sure, yep, that's FTX. We can see the volume here to where we currently are. And then we can see the price from here. Oh, it's kind of hard to do without that. All right, let's go from here to here. So as the price is pushing up, the volume is pushing down. I mean, it's barely pushing up. Let me see if I can get this out of the way. Like, it's barely, you can barely tell that the price is actually pushing up here, but you can definitely tell that the volume has decreased significantly since. That doesn't give me a lot of strength or belief that this is going to be something that's going to be able to be sustained. And also, just looking at this, I mean, just being a rational person, how many days is this going to be green for? Do you know what I mean? Like, obviously, last night we saw a little bit of red. That was on the close, but this can't go up forever. We can't be absolutely expecting, Bitcoin to go to the moon and just never find any resistance. It seems like it hasn't found any resistance. It's broke through multiple levels, broke through 17.5, broke through 19.6, broke through 20. Currently, we're finding some resistance at the 200 EMA, but it looks like it's pushing above it. I think this resistance might hold true, but it's just a ton of just exponential growth too fast. I think it's paired with the DXY just dumping over a period of time. But I also wanted to show this structure here because this is something that, it might not be, it might be. This is what I like to call.
So real quick, you say like how long can it go up? I would also push back with, remember last year when we had like 11 straight or 12 straight weekly closes in the red. I'm not saying that we're in full blown recovery mode, but I would caution against like trying to perfectly time when it's going to go back down. Because I think, it got to a point last year where it was like 7 weeks in a row. Oh, it can't be another red week. 8 weeks in a row. Okay, it's definitely not going to be a red week this time. Nope, kept on going. So, who knows? Whatever these market makers want to do is what they're going to do. Just be careful is all I'll say.
Yeah. And again, I think with that also too might have been just because there's a lot more money in the markets. So I think selling off earlier for them might have been a little bit easier. Whereas doing it now, you're making not nearly as much as when Bitcoin was 42,000, 43,000, and then it was dropping to 26K. So it really depends. But I think that right now we're just seeing something where there's a ton of macro factors that you and me talk about all the time. But it seems like a lot of people just aren't caring right now, which might be, deadly for retail themselves. And it might be just something that institutional players are taking advantage of because they know it's coming. And they know that the people who are going to be holding it won't be able to sustain that price long term. But obviously people like to buy green candles. And one thing that I'm seeing right here, which I've seen it before, this not necessarily the cleanest, but this to me looks like a market maker pattern where we get one wave up, second wave up, third wave up. And it's like this flat sideways trade. And this is on the 4-hourly. We can also see it on the daily, but it's not as clear on the daily. So actually, I can't even see it on the daily. I think it was the 8-hourly bag. But you can see it on these shorter time frames where it's just moving up. We did see this a while back in September. This was, I think, right here. Yeah. This one's a little bit clearer where you just see, one push up, massive push up, and then you get another one, and then it kind of trades sideways. But usually it breaks down the same way it came up. This one just absolutely just tanked. And maybe you can see it here. 1, 2, 3. You could argue that. But I wouldn't be surprised.
Can you look at the time frame on that real quick? Not that it's going to be the same by any means, people, but I'm just interested to know how long it was that happened.
Absolutely. So this is on the 4-hourly. So let's see. Tuesday, September 6th to Friday, September 16th was probably... Okay. Oh, no, actually, yeah. Let's go further here. That's probably where it's equal to it. Where is that? Monday, September 19th. So
about a 2-week
time frame there. Exactly.
Okay.
So it's a pattern that it's very similar. It's not 100% perfect, but, those tend to break down the same way that they came up. But, so I think we still have some, push to the upside on the lower time frames. Like we're looking at the 4-hourly, and if we look at the stochastic RSI, we're pretty oversold and we're pushing to the upside. Let's check the 2-hourly. Yeah, we're pushing to the upside. 1-hourly. We're getting close to overbought, but again, that could just be some small fluctuations. And we're not too far from this level right here. We're at 21.2. We just hit 21.2, and this is 21.8, so $600 push. 4-hourly still looks like it has some momentum to the upside. Hourly can be overbought for a period of time. Yep. So that's what I'm seeing on the lower time frames, but necessarily it's not all bullish when we look at the macro.
Okay. Anything else you want to touch on there? Does that about wrap it up for you, Kev?
I just want to add some other stuff, just like, we're seeing tons of long positions open up. I think that's just people who are absolutely FOMOing into the market right now. Let me just pull up CoinGlass real quick. I was also looking at some of the funding rates in the past day or so. We're seeing insane funding rates, like absolutely positive. Like, like whenever you see white, that means like, okay, that's extremely positive. A lot of people are going long in the market. But we can see some of these like 0.0575 for XRP. That's extremely positive. What else we got? 0.031. All these are just necessarily telling me that a lot of people are going long, not too many people are shorting, so there's not enough fuel for a short squeeze to push up. I think if anything, there's going to be a liquidity that's just building below, and if enough people are going long right now and we're overbought, and market makers know this, obviously they're going to liquidate positions, and we are in liquidation season. We've seen massive liquidations. We're seeing 200 million to $250 million every day pretty much for the past week at least. So I wouldn't be surprised if we do see some massive liquidations on the reverse of whatever move this is. We're still going to see some corrective move to the downside. How big is that? I have no idea. Liquidations could drive how big that correction is, or it could just end up being like a small correction, we'd push up again. I still think that there is potential room for pushing up for Bitcoin for the next few weeks. 24K might be somewhere that I think it could potentially hit, and that's mainly because it's part of this falling wedge pattern. That's the top of it, and it's also where the 200 EMA rests on the weekly. So that could be, with the death cross, a pretty good point for it to all collapse at one perfect part of the charts. But yeah, that's what I'm seeing for the funding rates, and that's what I'm thinking of for a lot of longs and shorts and liquidation levels. So if we look at the past, let's say the past 4 hours, we can see that the market is pretty much longing Bitcoin right now. It's 52% to 47%. And if we go to the past 12 hours, we're just above half. We're at 50% to 11. And the past 24 hours, I think people, that changed too. So it's pretty much across the board. Everyone is longing Bitcoin in the past 24 hours. There's a majority of people doing it. Some exchanges, you can see there's way more, like Bitfinex. CoinX is pretty bullish on a lot of this stuff. So we're seeing a lot of that. Just pull up liquidations real quick. Past 24 hours, 180 million. That's going to go up today, especially if we hit that 20,800 or 21,800 level. So I'm just seeing a lot of people who are just getting absolutely liquidated. A lot of greed. I think a lot of people are going long right now, and a lot of them might just be driven by FOMO, which is unfortunate. But that doesn't tell me that the market is in full bull mode. I think it's just manipulating a lot of people's perception, making people buy into horrible entry levels, in my opinion, especially when you had 16.5 a week ago. Not financial advice, but I think just people are getting trapped, and I wouldn't be surprised if the same thing we saw on the way up where people were shorting, same thing happens on the way down when people are longing.
Okay. I think that's going to wrap it up for today. Some good stuff covered there. Appreciate that, Kev. Any final thoughts on our way out the door?
I'll be honest. I'm not really that worried about the market right now. I think this is probably the most calm I've ever been in terms of looking at these charts. There's just a lot of things that are telling me that necessarily the macro remains what the macro is going to do regardless of this pump. I just think that you need to think bigger than the short-term time frames, and at the end of the day, just keep your head down and focus. There's nothing that's changed for me, nothing that we aren't already expecting. Only thing I'd be really interested in seeing is if we actually do enter a recession. I feel like that's like the big question right now. Are we in a recession? What is a recession?
Yeah.
It's so weird because we could see definitely goods and prices and stuff like that are going up, but for some reason everyone's super bullish. And Bitcoin's never been a recession, so I'd be really interested to see what sides, if we're in a recession or not. And for stuff I'm looking at, I'm just going to be watching the dollar, and I'm going to be watching the market futures tonight for traditional markets. It'll be interesting to see how everything opens up tomorrow.
Okay. Big week ahead. Thank you, everybody, for watching. Once again, please hit that like button, subscribe to our channel. We'll be back Thursday afternoon after the traditional markets close to kind of recap everything we've seen so far this week. So for Kevin, for the team at FLOLiO, I am Jeremy. Have a great day, everybody. We will see you next time.
Take care, everyone.